Hey, welcome back. It's that time of year when everyone is talking about taxes, but most of us are in need of a little help when it comes to planning our finances. Tyler Covington with Covington Wealth Management joins me this morning to give us a few planners. Tyler, how are you doing first of all this morning?
Good. Thanks for having me. How are you doing?
Oh, I'm doing great. I'm so glad you are here with us today. But let's just go ahead and jump off into some of these questions because we have quite a few. So my first thing is, do people need retirement accounts?
Absolutely. But first, I'd like to say I'm not an accountant. I always do recommend consulting a CPA or tax advisor before making tax decisions. But what are some things we can do to help reduce our taxes regarding retirement accounts? So if we're saving for retirement, something that we can do up until the tax filing deadline in April is make a traditional IRA contribution.
Okay.
And just for example, if you're under 50 and you can contribute up to $6,500 to your IRA.
Under 50.
Under 50,
Okay.
$6,500. And let's say you're in a 22% federal tax bracket, you live in Alabama or Mississippi, that's 5%. That $6,500 contribution can save you up to $1,755 on your income taxes.
Gotcha. Now, talk to me about, many of our viewers are retired, and what advice do you have when it comes to charitable rollovers?
That's a great question. You know, we've got lots of folks that have required distributions. So the government's saying, we gave you a tax break on the way in, now we want you to pay taxes when it comes out. So if you give to your church or a charitable organization, a great way to eliminate that income tax is to roll your tithe or charitable contribution directly from your IRA to the church or 501c3 charitable organization. And what this does is it eliminates the income tax that comes with a required distribution or distribution from a retirement account, which is considered taxable income.
Gotcha. Now, I know around this time, it seems like, I told you earlier, I get my mom to help me out. So what's maybe some advice you would give to people like me who are younger who just are kind of trying to figure out everything still?
So there's never a bad time to start making good financial decisions. And one thing I hear over and over again and believe is that you can always make more money, you can never get more time. So the sooner that you're able to consult with an advisor, an accountant, people of that nature, and making good financial decisions, the better off you'll be.
And so I just want to run through a quick review of everything we've talked about so far. So let's start back with the benefits of planning through retirement accounts and just kind of go through each of those dots if somebody's just now hopping onto here.
Yeah, absolutely. So up until April 15th, the deadline for 2023 tax filing, you can make a traditional IRA contribution. Under 50, that's up to $6,500 for 2023. And the example we used was if you're in a 27% tax bracket or you pay that in income taxes, that could save you up to $1,755 on your income taxes. If you already are retired and you're taking required minimum distributions, one way to avoid that tax is if you roll directly from your IRA to the charitable organization or your church, which over age 73 will avoid that income tax altogether if RMD requirement is met.
And then last question I have for you real quick before we wrap up. So if somebody does it after the deadline, then what happens?
Oh.
Not good stuff?
Call your accountant. Maybe he's got magic fingers.
Okay, well thank you so much, Tyler, for being on here with me. That is some great advice. I needed it. I'm going to take your notes. He wrote notes for me down. So we will be right after the break, and you're watching WCBI News Sunrise on Fox 4.